Hello, everybody. My name is Maurice Button. I'm the CEO of City Financial Global, and it's my great pleasure this afternoon to be interviewing Mark Kenber, who is the Executive Director of the Voluntary Carbon Market Integrity Initiative. Welcome, Mark.
Thank you very much. Pleasure to be here.
Very good to have you. Mark will be speaking at our International Carbon Market Summit being held in London on the 30th of October. But let's turn to the questions, Mark. First of all, what is your assessment of where we are in terms of reforming carbon credits? And obviously they've had something of a bad press. How long do you think it will take before their credibility is restored?
So that's a very good question. The credibility of carbon markets in general, or credit-based carbon markets, depends a lot on public sentiment, and particularly the sentiment of the stakeholders around the market, the buyers, the sellers, the project developers, but also the environmental community. And while the market, in the voluntary market, which is where I focus a lot of my time, had a boom 2 or 3 years ago, it's at best flatlined since then and possibly shrunk a bit, at least in value terms this year. And there are a number of reasons for that. One is an absolutely legitimate increased scrutiny of project quality and the quality of the credits that projects generate. And we've seen various bits of various press exposés, but also academic research that suggests that some projects in some project categories might not be all they're cracked up to be. But there's also been external sort of macroeconomic effects, the war in Ukraine, inflation around the world, companies not buying carbon credits their #1 priority when there isn't cash to be spent. So that's obviously dampened demand as well. On the first piece, the scrutiny, a well-functioning market of any type requires transparency. And so as an organization that is focused on high integrity carbon markets, we welcome that scrutiny. But one of the challenges that comes out of that is there not being an acceptable benchmark for what constitutes good enough. So we are stuck in a conversation a little bit we're stuck between all carbon credits must be perfect, otherwise they're not legitimate. And as we know, in life, nothing is ever perfect, and having no market at all. And I think we've sort of, a bit like much of politics, we seem to have gone to the extremes and are not really thinking about, okay, what is good enough? What's beyond reasonable doubt? And that's what VCMI and a lot of other organizations are doing, both helping reform and reform the system so that we have something that is credible, meaning not that the credits are perfect, but that people understand what they really do represent and that they can discount them if needed, or they can take risk-based approaches to how they use those carbon credits. And so I think we need to get to another level of sophistication, which recognizes that carbon credits have an incredibly valuable role to play in channeling finance to where it's needed, but are never going to be perfect. And therefore, how do we build the systems to take the risks and the imperfections into account so that we're not throwing everything out, but we're factoring in that risk, the possible problems, and discounting accordingly.
It sounds like quite a difficult balance to achieve, but I know that one of the things that you have done as an organization is to introduce the claim of conduct, the claims code of conduct. Could you tell us a little bit more about that and how that's going to work and how that will contribute to the effort you just described?
Yes, I'd be happy to. So if we think like any market, the voluntary carbon market has a supply side and a demand side. And the supply side, which has attracted most of the attention, has been about the quality of the projects, the quality of the credits, whether the projects are additional, that's to say whether they would have happened anyway, whether the measurement is robust, and that's exceptionally important. But another concern is around greenwashing and what things companies can do and what they can say about their engagement with carbon markets. And you'll have seen, there have been lawsuits, airlines, luxury goods companies who have been sued for misrepresentation of what they're doing because they've been using carbon credits or because the carbon credits haven't been good enough. Various lawsuits in the European Union, various exposés, and the European Parliament recently voting to outlaw, to a certain extent, the use of the term carbon neutral. But companies are shying away from the market. You'll have heard the term green hushing, because
Yes,
they are
yes.
worried about being called out for something, even if they believe they're doing the right thing. So the VCMI's claims code is designed to answer two questions. When and under what circumstances can companies credibly make use of carbon credits? And second, what can they credibly say about it? So we've established a 4-step guide which tells companies what they need to do. It starts with making sure that they're following general corporate good practice on climate change, selecting what kind of claim they want to make, telling them how to buy credits, what things they need to take into account, and then a very transparent reporting and assurance framework. And it's designed to enable companies to have confidence that if they follow it, then they are doing the right thing. And we are supported by a wide range of stakeholders from government, NGOs, and business, so they've got confidence there. But also for you, me, and the general public to be able to distinguish between a claim that is really robust and based on following good guidance, and frankly claims that are genuinely greenwash and should be outlawed.
I mean, that should help a great deal, I should imagine. And you mentioned earlier that there are various different groupings doing different things in this area. How does your work fit with that of the Integrity Council for voluntary carbon markets?
Well, we are close partners. I mean, at an individual level, for example, I'm the executive director of VCMI and I sit on the governing board of ICVCM. And there's a lot of cross-fertilization at the expert level and at the executive level as well. But I mentioned before that we've got a market, like any market, has a supply side and a demand side. ICVCM is creating the rule book for the supply side. So what constitutes a high quality credit from a high quality project that has met all the things, all the requirements that average participant in this market would say are reasonable. So you've done proper consultation with people affected by the project. You've got the projects are generally additional. You've got baselines which you're measuring the carbon credit generation against, done in a credible and robust way. So they're designing all the supply side standard, and they've created, or we've created an assessment framework for both assessing the current standards in the market and also different project category types. And those were released in March and July respectively, and expecting the first credits and first crediting programs to be accredited this year. VCMI, as I said, works on the demand side. So together, we believe we've created a end-to-end high integrity framework. So from everything from the germ of an idea of a project through to project development, financing, issuing of credits, use of credits, and public claims about the use of those credits.
So effectively, the sort of complementary activities looking after supply and demand. Very good. How do you see the relationship developing between compliance markets and the voluntary carbon markets over time?
So from VCMI's perspective, we believe that sooner rather than later, everything should be covered by compliance markets. And that's not to say just sort of the Paris Agreement mechanisms known as Article 6.2 and Article 6.4, which allow crediting projects and transactions between governments, but following models like the European Emissions Trading Scheme and similar carbon pricing schemes, which are in place in over 50 or 60 jurisdictions around the world, that we need to move quickly to a properly policy-driven, regulated environment. And VCMI actively pursues that, not so much in terms of creating compliance markets, that's done by national governments and by the UN already, but looking at how various aspects of what we propose or recommend should be included in regulation. So, for example, disclosure of use of carbon credits should be part of formal disclosures, whether it's to financial administrators or to Securities and Exchange Council, FCA, etc., etc. We believe that the claims and what companies say about what they're doing and use of carbon credits should be covered by advertising standards, consumer protection, and we work with a group of over 20 governments, and we discuss that with them very openly, and that's actually what many companies want as well, because as long as something is voluntary, managed by an NGO like us, doesn't mean it lacks credibility. We believe it's very rigorous and robust, but of course it's subject to change. But if it's covered by regulation, then that's much clearer. It's much easier to separate those who are doing the right thing from those that aren't. There are sanctions, probably enforceable sanctions for those who aren't doing the right thing. And of course, the possibility of having joined up frameworks across all the major economies, which is obviously much more attractive to companies who are operating in multiple jurisdictions.
And do you think that that's achieving that will deliver eventually the holy grail of there being a unified price for carbon across the world, or are we never going to get to that point?
I don't think we'll ever get, well, ever's a long time, but I don't think we're likely to get a unified price of carbon anytime soon, just because, you know, if you think about national emissions caps or emissions trading schemes, each country has a different economic profile, has much higher or lower emissions, much more or less openness to market-based approaches. Some countries prefer taxes, others trading schemes. And then, of course, there will always be closed trading schemes like the European emissions trading system, which has its cap on all the companies, and then credit-based approaches, which, you know, any given price, there will be a certain level of supply and demand, and that price will be driven partly by how companies can use carbon credits, and that will be in turn determined by the rules for use of carbon credits, but also how much they're covered by emerging policy frameworks. So a lot of buyers at the moment come from countries or regions that don't have fully implemented policy regimes like the European Union or the UK, for that matter.
Interesting. So, I mean, it remains a patchwork, but we just have to make the best of it that we can and make it as effective as possible.
Yes, I mean, it's a patchwork, but it's not completely fragmented. So there are prices for, you know, quoted globally for carbon credits, and they do vary by different types of credits. I mean, when in an earlier part of our conversation, I mentioned that, you know, there is no such thing as a perfect carbon credit, and there will be some that are associated with greater or lesser risk or uncertainty, and that would be priced in. So we wouldn't expect there to be a single price, and you see that in other commodities. Different commodities with different qualities have different prices. They have maybe a single or one or two benchmarks, and you see that in the carbon world as well, but not a single price for everything.
Absolutely fascinating. Mark, thank you very much for sharing those insights with us today. And I very much hope, excellent, and I very much hope that the people watching this will be able to join us in person on the 30th of October in London for the International Carbon Market Summit, where we'll be exploring all of these issues and themes in a lot more detail. Thank you very much.
Thank you very much, and I look forward to the event.